So welcome back. I'm Ted Thomas, and this is unusual. However, savvy investors end up actually purchasing tax lien certificates basically for pennies on the dollar. So this episode is all about how to buy a tax lien house at auction, and I'll cover that in depth in this lesson. Sometimes they pay less than 10 cents on the dollar and they end up in the property. Now this is all legal, it's ethical, and I'm going to guide you through a step-by-step process on this video. So later in the episode, I'll actually show you a case study where two of my students, a married couple, they purchased a tax lien certificate for pennies on the dollar, and their actual sale amount when they sold the property was over $169,000. I'll cover that before we finish this episode. So let's get started with the basics. Let's review the step-by-step process so you learn that. Becoming a savvy investor takes a little bit of study, but if you follow in the footsteps of the people that you're about to see, well, you're going to make some pretty big checks from the bank. So a tax certificate is the result of a levy by a local county on a property owner that has failed to pay their property tax. Now, in each state, the legislature governs the rules that are going to be used within that state. All right, so the state will determine what's going to happen at a tax lien or a tax deed auction. All right, they make the laws, and then the county supervisors, board of supervisors, or county commissioners, they will follow those rules and actually go through all the process. So I'll be right back with all those details in just 1 minute. Unfortunately, property owners have financial difficulties. What does that mean? It means they don't pay their bills, and if they don't pay their property taxes on time, they fail to pay property tax. I can tell you right now, the local county board of supervisors or county commissioners will send the tax collector to levy the tax. They'll try to collect the tax. If they can collect it, they're happy. If they can't collect it, they're going to be authorized to seize that property. And they're going to seize that property and they're going to sell it at auction. Now, many of the states are tax lien certificate states. That means they're benevolent. That's going to be collected is always collected by the tax collector and the treasurer. And what do they want to do? Well, in the states that sell tax lien certificates, they're going to sell a tax lien certificate, which is nothing more than a piece of paper. It's just a tax lien certificate. Anybody can pay someone else's taxes by buying a tax lien certificate. If the taxes are unpaid by the property owner, the tax collector and the treasurer, they'll have the property in default. If they're unpaid for the full 2 or 3 years during the redemption period, depending upon the state, then what will happen is they'll cause a foreclosure to take place, and they will remove the property owner and they'll confiscate the property. All right, now all states are authorized to have tax defaulted auctions. About half of the states are benevolent and they don't have the auction and they sell a tax lien certificate. Anybody can buy that tax lien certificate. All right, they start out at low prices and there's thousands of them to buy. It's the safest investment in America today because you invest with the government, you're going to get a check back from the government. So half of the states do not seize the property. They do not push the people off the property. They let the person or the property owner stay in the property even though they're in default. Now, I call that a benevolent state, and they're allowing the people to stay there, give them a chance to recover, pay their taxes. If they come in and come forward and pay their taxes and the accrued interest, well, guess what? They'll cancel the tax lien certificate and the people will go on as if nothing happened. But if they don't pay the taxes, then the state will move forward and they will confiscate the property and resell it at an auction. All right, so they always have a lien against the property for the people that don't pay their property taxes. Now, if the property owner recovers financially and comes forward and pays the tax lien certificate, then it completely goes away and the people just resume their life as they should. So the investor, they do quite well on tax lien certificates because when the owner comes forward, they pay, number one, all of the investment, the original investment, and they pay the accrued interest, and sometimes they pay some fees and penalties on top of that. You see those little white circles? That's how many auctions are taking place within that state in the next 90 days. This calendar updates every single day. I'm here today to show you how to make money. To do that, I'm going to show you briefly that there are thousands of tax defaulted real estate properties across the 3,000 plus counties in the United States. This is quite interesting. You're looking at the Ted Thomas Magic Interactive Map and Auction Calendar. It changes every day. Now, I created the calendar and the map so I would know how many auctions are taking place every day in the United States. Now I can show the little guy how to make money. Most importantly, I created this system so I could have an auction list for each auction 24/7. So today's episode is answering the question, how to buy tax lien houses at auction. So here's how that all happens. Tax liens are sold at public auctions. Anybody can buy the tax certificate.
There's 100,000 right away, but 100 now, but 200,000 to go. But 200,000, there's a 200 TV to go.
Now, many auctions are reverse auctions. In other words, Florida, for example, starts at 18%, then it goes 17.5, 17, 16.5, 16. In other words, reverse auction, lowest bidder will get the property in the state of Florida. So Florida auctions are a reverse auction. Arizona are a reverse auction. Now, well-trained investors, what they're doing is they're showing up at tax lien certificate auctions, and what they're doing is they're trying to figure out properties that people will not redeem. Redeem means they come in and pay the tax. So they're going to look for properties they don't believe anyone's going to redeem, and they'll buy that tax certificate and hope that people don't come in and redeem. If they don't come in and redeem, in most states, people will get the property. So if you buy a tax lien certificate and you don't get paid, you're going to get the property without a mortgage or a deed of trust loan. Now, before I go into a lot of depth on this, I want to remind everyone, I'm not an attorney, I'm not a real estate broker, I'm not a CPA, I'm not giving investment advice, I'm not giving legal advice. I'm just an average person that buys and sells tax lien certificates, and I teach other people how to do it. So in a few minutes, I'm going to reveal to you how a couple followed my system, and they did it step by step in Arizona, and they ended up with a property after a 3-year redemption period. The property owner did not pay, and they ended up with a property. And I'll tell you more about that in just a few minutes. All right, and this all is following the rules. In other words, due process of law must be followed. The property owner ends up being foreclosed on because they didn't pay their tax lien certificate. So what are we talking about today? We're talking about how to buy tax lien houses at auction. Well, you're going to buy a tax lien certificate. If nobody pays the certificate, you bought it on a house, you're going to end up with that house, and I'll show you that in just a minute. All right, now the bidding process is not complicated. It's not complicated, but it's going to be different in state by state. It's going to be different county by county. All right, so let's have a couple of words of caution here. All right, if you buy a tax lien certificate on a poorly maintained property and it's in a slum neighborhood, that's a mistake. Why? Because if the people don't pay the tax certificate, you're going to get a poorly maintained property in a slum neighborhood. So I don't think you want to do that. So what you want to do is you want to research, you have boots on the ground, and you want to look and see at what the property that the tax lien is on. In other words, if the property owner hasn't paid the tax, well, guess what? They're going to issue a tax lien certificate. When they issue that, you have a chance then to research the property. You can go online and research it. You can go to the property, put boots on the ground, and see what the property is. You don't want to buy in slum neighborhoods, because if you end up with the property, if you end up not getting paid, that's what you're going to have, a property in a slum neighborhood. All right, so the opportunity is always solving the problem. So if you can solve the problem, here's what you're doing when you buy a tax lien certificate. You're solving a problem for the county, and the county will reward you for that. What's your reward? 16, 18, 24% interest. That's pretty darn good. Nothing wrong with that. All right, now if the people come in and pay their tax certificate during the redemption period, then you're going to get that accrued interest. So you get your money back plus that interest. So that's a good deal. But what happens if the people don't come in and pay? Well, in most states, if the people don't come in and pay the tax certificate, well, then what's going to happen is you're going to be able to foreclose on the property. That means you're going to be able to take the property, foreclose on it, and then you're going to move the people off the property. Meanwhile, they've stayed on the property for 2 years and they haven't paid their tax, but now with the foreclosure, they'll remove the people from the property, you own the property, and you can do whatever you want to do with that property. You could live in it, you could fix it up, you could rent it, or you could sell it. Lots of people rent them and they sell them. So the point is, it's your property, you can do anything you want. All right, now if you're an entrepreneur, there's a lot of reasons for being an entrepreneur, but more than likely, you probably don't fit into a corporate mold. If you don't fit a corporate mold, I completely understand that. This is a perfect business for you. Now, I'm going to run out of time, and what I've been talking about is how to buy a tax lien house at auction. So now I'm going to show you an exact example. All right, so I'm going to call this couple D&R. So Mrs. D&R attend a tax lien certificate auction. They're not selling properties at this auction. They're selling tax certificates. All right, if you buy a tax certificate, you should look at the property. They did exactly that. They went out and looked at the property. They bought a tax certificate for $11,000, only $11,000. All right, they continuously paid the taxes during the redemption period for 1 year, 2 years, and 3 years. All right, so now they paid $11,000 in total, and the property owner never came forward and redeemed the certificate. So now the property is completely in default. So they foreclosed on the property. The judge laid the gavel down. The gavel comes down. That means the property is sold. They ended up with the property for $11,000, and they ended up making $169,000 profit. I'm sure that would work for you, and it would make a significant difference in your life. Now, right below me, if you want an auction list, just go right below me, and you'll find an auction list, and you can see what a sample looks like. I'm Ted Thomas.